Hey everyone, welcome back to Corporate Decoder, the place where we uncover the juicy secrets buried in Wall Street's financial filings. Today we are diving deep into Putnam Government Money Market Fund's annual shareholder report for 2025, and let me tell you, some of these numbers have more twists and turns than a corporate merger. And before we get to dissecting these financials, make sure you are subscribed because we are the only channel brave enough to tackle these documents so you don't have to. Also consider joining our Discord community linked below. Alright, so we are looking at the Putnam Government Money Market Fund's annual report for the period the 1st of October 2024 to the 30th of September 2025. This fund essentially acts as a super safe place for money, aiming to keep your principal intact while earning a little bit of interest. Think of it as a very responsible savings account for big investors. First up, let's talk about costs. For a hypothetical 10,000 investment in Class A shares, the cost was just $46. That is a tiny fraction of a percent, really low considering the safety it offers. As of the 30th of September 2025, the 7-day current yield for Class A shares was 3.79% and the effective yield was 3.86%. Now that might sound low compared to other investments, but for a money market fund, this is pretty standard and a testament to its stability. What influenced their performance? Well, the fund kept its investments short-term, meaning it held onto things that matured quickly. This was a strategic move because they anticipated that the US Federal Reserve, or the Fed, would slow down its rate cuts and make them less dramatic than what the market expected. So they basically played it safe and kept their money in overnight repurchase agreements backed by solid US treasuries and government agency securities. They also dipped into government agency discount notes and some floating rate securities for a bit of a yield boost. Now for the big picture numbers, the total net assets for the fund were over $383 million. That is a serious chunk of change. They held 27 different investments and the total management fees paid amounted to almost $1 million. Moving on to Class C shares, the costs are the same as Class A for a 10,000 investment, $46. The yields are also identical at 3.79% current and 3.86% effective. The performance strategy is the same too, focusing on shorter maturities due to their outlook on Fed rates. The only note here is that Class C performance reflects its conversion to Class A shares after 8 years, which is a common feature to align with longer-term investors. For Class G shares, the costs are even lower at just $34 for that 10,000 investment. That is a bit of a discount compared to A and C. The yields are slightly better too at 3.91% current and 3.99% effective. Again, the investment strategy remained focused on shorter maturities and the same reasons for their performance outlook apply. Class I shares have the same low cost as Class G at $34 for a 10,000 investment, and their yields are also slightly higher at 3.93% current and 4.01% effective. The investment details and strategy remain consistent across these classes. Class P shares also cost $34 for a 10,000 investment and offer a yield of 3.91% current and 3.99% effective. The investment strategy and approach are consistent with the other classes discussed. Finally, Class R shares have the higher cost again at $46 for that 10,000 investment, and their yields are back to 3.79% current and 3.86% effective. The investment approach echoes the others, focusing on shorter maturities due to interest rate expectations. How has the fund changed? A significant change during this reporting period was the merger of Putnam Investments Limited with Franklin Templeton Investment Management Limited. This means that the investment professionals from Putnam Investments Limited became employees of Franklin Templeton Investment Management Limited. As a result, the agreement with Putnam Investments Limited was terminated and a new agreement with Franklin Templeton Investment Management Limited was put in place, making them a sub-advisor. Now let's look at some key financial statements. The total net assets remained at a very healthy $383,439,304. This shows the fund is stable and has significant backing. The total management fees paid were $958,970. This is spread across the different classes and is a normal operational cost for a fund of this size. Diving deeper into the financial statements, we see the statement of assets and liabilities. For Class A shares, the net assets were over $143 million, with over 143 million shares outstanding, all valued at $1 per S-share. This clearly shows the fund's stability as the net asset value per S-share remained at $1. The total return for Class A shares was over 4%, which is solid for a money market fund. For Class P shares, we see even larger net assets at over $221 million with a similar share count and net asset value per S-share of $1. Their total return was also over 4%. Looking at the statement of operations for the year ended the 30th of September 2025, the fund earned over $16 million in interest from unaffiliated issuers. This is the primary way money market funds make money. Total expenses for the fund were around $1.4 million after accounting for expense reductions, which is quite low relative to their interest income. This resulted in a net investment income of over $14.8 million. This is the money that is available to be distributed to shareholders. The changes in net assets section reveal some interesting movements. For the year ended the 30th of September 2025, there was a net increase in net assets of over $14 million driven largely by capital share transactions, especially in Class P and Class G shares. This suggests significant inflows and outflows in those specific share classes, indicating dynamic investor activity. The net assets at the beginning of the year were over $369 million, showing significant growth. Now let's look at where the money is actually invested. The schedule of investments shows that 20.4% of the fund's assets are in US government and agency securities. These are typically very low risk. The vast majority of the fund, 79.6%, is in repurchase agreements. These are essentially short-term loans backed by collateral, usually US Treasuries or agency mortgage-backed securities. This heavy reliance on repurchase agreements underscores the fund's focus on safety and liquidity. The total cost of these investments was over $383 million, which matches the total net assets, reinforcing the idea that the fund is very conservatively managed. Maine Putnam investment funds report of independent registered public accounting firm Maine, and as with any financial report, we get the stamp of approval from independent auditors. PwC has audited these financial statements, and they gave a clean opinion stating that the financial statements present fairly in all material respects the financial position of the fund. This is exactly what you want to see a Big Four accounting firm saying everything is in order. They have been auditing these funds for a very long time, going back to at least 1957, which speaks to the stability and long-standing nature of this fund family. Maine Putnam Investment Fund's total return Maine. In terms of performance metrics for Class A shares, the total return for the year was around 4.10%, well within expectations for a money market fund. The expense ratios are also very competitive, with Class G and I shares having the lowest expense ratios at 0.33%. Maine the trustees reviewed the management fee schedules in effect for all funds. So Maine, interestingly, the report touches on how the Board of Trustees approved the management contracts. They reviewed fee schedules, compared them to competitors, looked at the quality of services, and took into account the overall financial strength of Franklin Templeton. They noted that the fee schedule for this fund represented reasonable compensation. They also reviewed performance data from Lipper Inc. and found that the funds on an asset-weighted basis were in the 27th percentile of their peers for the one-year period. They also outperformed their benchmarks by 3% before fees. Longer-term performance was also strong, ranking in the 20th percentile for 3, 5, and 10-year periods. Maine Putnam Investment Funds, your fund's management contracts. Maine overall, the Putnam Government Money Market Fund appears to be a very stable and conservatively managed fund. Their investment strategy prioritizes safety and liquidity, which is exactly what you expect from a money market fund. The costs are low, the yields are respectable for its category, and the financials show stability. The recent merger of investment teams adds an interesting layer, but the report suggests a smooth transition with Franklin Templeton's expertise now at the helm. So in a nutshell, this fund is doing exactly what it intends to do: be a safe harbor for cash. While the returns won't make you rich, they will likely preserve your capital and offer a modest income. Is it exciting? Number, is it necessary for many investors? Absolutely. Alright, that is our deep dive into the Putnam Government Money Market Fund's annual report. What do you think about their investment strategy and the numbers we uncovered? Let us know in the comments below. If you found this breakdown valuable, smash that like button and subscribe for more corporate dissections. And don't forget to join our Discord community, linked in the description, for more behind the scenes chat. Thanks for watching, and we will see you next time.